Hey folks, so we're going to run weekly charts here, and I am trying to make these brighter. So there's a grid behind it, the background's a little darker, and the line should pop a little more, and I changed the vertical. So it should be a little easier to understand on the charts from now on. Please give me feedback to that as to whether or not it is or isn't easy to read, or if it didn't get better. If I continue to do this, which I probably will, I may just have to get a different video program to make these a little cleaner and pop more, something that I can play with the brightness and sharpness of. But to get into it, as always, subscribe and click on notifications, because some of this is timely, and we're going to start doing a lot more of the process. Later today, they'll probably attach to this. I'll probably do a small video. It seems like people are interested in stop losses and how you're supposed to set them. So I'll probably do a very quick 5-minute video that will be at the end of this that you can click on and look at if you want to. So let's just get into it. So here on the weekly on ALT, you can just tell that we're in this major downtrend. So I'm going to just do it daily on it because I really don't have enough data points. Like on the weekly, it's just been absolutely decimated since here. Stocks like this, when they move, I mean, this is a pretty powerful move. We came back up. What do I like about this? I like how you are holding the 1625 level on the daily, and we've tested it, and we ran back up. We've tested it, and notice how you're not even getting close to that line anymore. And now let's look at something, and we talked about this in one of the other videos. Look at these crosses, right? So we have a 5 and 8 MACD cross, which is telling us that in the short term, at least, we're going to go higher, or it's alluding that we're going to go higher. So we have that going for us, and I think that that's really important. Now, if you're trying to figure out where this is going to go to or try to set a target, what you really have to look at is you have to look at where you are in context to the chart on the daily. Where was the next real spot that created havoc? And that was really here, right? So this spot really created havoc. You can see this huge down bar where we went from 21 to 17 in a day and then fell off. So that's what I would call like a havoc line, and you can even see the little break here. And then if you go across with that spot, look how that works, right? Isn't that crazy? So you can actually see how this spot is a resistance level, because it was support here and support and resistance flip, right? So let's take a look at that. So that's going to be our next spot. So realistically, to play this stock, if I was interested in playing it, I'd be looking at, support is your 1625, which is really where your stop should be. Even if you close below your 5-day at this point, I'd be a little concerned. But it doesn't look like that's going to happen. This looks like it should push right to the 21 level. And then from there, you could have some major resistance issues. But now you're in at a different spot, and then you can just move your stop up as you go. So AMD we talked about earlier in the week, and let's start at a weekly. Okay, so it's already on there. Okay, so we talk about these patterns, and I just want you to notice the width of this. Notice on the weekly how it's gotten wider. Notice how this is your flagpole right here, right? This bar, right? That was your new range. What happened when we got below that range? We popped right back into it, right? So we're right back above 87.11. This is the high of that flag. Now what's interesting is I've been saying for a while that this is going to be your new, I would say, spot to be. The semis and the biotech started this week, and we've been talking about the biotechs in the newsletter for, 2 months, 3 months, talking about how that's going to be a hot sector. And we should probably review those as well really quickly, but let's just clone this for a second. So, and then you'll just see that this line will just happen to fit perfectly there, right? So, and I'm not going to get rid of the arrows, just know that they're there for a reason. But notice we can't close above that, and now we're down here, and we're on the lower end of the channel. So this is a fairly easy trade for somebody that's interested in this, right? So your breakout bar would literally be the high on the weekly over here, which is going to take you into these. Now you might not want to buy it because you're worried about this crossover, but that's what pullback buyers do. This is where they buy. Where do I buy something like this? I want confirmation even if I have to pay up because I like my money to work for me and I don't have a lot of patience and everybody's style is different. So I would want to break above this line and the 5 and the 8 because by then they would cross and I'd have that confirmation. And that would mean that the probability of this trade working is greater. So, and just looking at the daily, we talked about this level. Boom, we talked about it a while ago, boomerang effect. Here you are on the bottom end of that. And you can see how this all ties together. So array, so we've been around for a little bit, but not enough. So you haven't been around enough that you can really get a good draw on here, right? We need 30 lines statistically to make an actual pattern. We don't have that here. So without that 30 lines, we just go down to a daily. And on the daily, put this up here. On the daily, you can see your support and resistance levels. So this 44 level, we really can't get above. If I was looking for something positive, I like the fact that we closed on the 50, right on the 50-day. Below, we've really had issue with this. This is the second day in a row. I've got the 5 and the 8 crossing upward, which means that I could see upward pressure. This would probably be some resistance right around here, right around your 21-day. So I have a lot of stuff to work through here. Right? So I'm not in a big hurry here to get involved in this. And I also have declining volume. So I would say that your money's better spent in other areas. And I'd wait for this to develop and confirm before going near it. So, and speaking of that, I mean, we've been talking about this one for a while, but let's look at this on the weekly so we can really understand what's going on here. So, blink. Right? So here we go. And you can see this, right? I mean, you can see this line here. And I'm just leaving the arrows on. I use them as pointers, and now we clone our lines, right? Because they're supposed to match. Channels are supposed to match. So just keep that in mind. No matter what happens with the channel, where it lands, they're supposed to match. And you find the line that is the strongest. This was the strongest to me. So, or the most defined. So here you are. You can just see how that fits perfectly right into this. Right, and so here we are just in this range. Here's your flagpole, and this is the weekly. Oh, I don't know why that happened. Okay, so this is your flagpole, right? Or your flag, sorry. Thrown off there. That's your flagpole. And you can see what's going on with it. We're not breaking it, and we can't seem to close above it, can we? Right? So we were in this on the daily, I was talking about it, but what's interesting here is if you close on blank above 54, which you're not doing, if you get a weekly close above 54, that's a breakout. Now, the volume, look at the volume versus the sell volume on this, right? This is a sell day. These are buy weeks. These are sell weeks, right? Every sell week is met after a huge buy week by less selling. Here, right? So that tells you that people are not getting out of this trade and that this probably continues. Now, to find a better spot, we were looking at 51 and we were in this area. You can just see how on the daily, how this rolls over into this area, right? And now you're rolling, and now this 5 is about to cross on the 8, and this is setting us up for a retest of the $63 level. So this is definitely something I would keep on your radar because I think that there's more here. So BNGO, we did fairly well with for those that were trading it. These are key levels on the weekly, and you can see how this 10 level has just been respected. And now you have an inside week, and your open and close are above that week. You'd call it a bearish engulfing, but it's not because the previous bar was bearish. So it's immaterial. But what is material? So we drill down into this. I have a higher peak, lower peak, higher peak, lower peak. So let's get rid of a bunch of stuff on here so we can just focus on that one thing. So let's get rid of all these horizontal lines. Let's remove all the segment lines. And let's just focus on this little pattern for a second so you guys can understand this. Okay, this is going through what is referred to as a velocity contraction pattern. right? So what does that mean? It means that the velocity of the trade is stopped. Remember all this? Boom. We don't have that anymore. It's stopping. And now you have the 8 crossing the 5, 5 crossing the 8, nothing happening, can't get above it. But what happens is you form a wedge, okay? And you're forming a wedge on the top of the chart in a bull flag, essentially. So as this gets tighter, it's setting up. But what I need to have happen before I would get involved with this or consider getting involved in it, there's a couple other things, but the major thing is I got to get above this wedge, right? I might not even want to touch it till I'm over here, but I at least need to get above this wedge. So before I would enter this trade, I'd be looking for an 1160, 1161. That would get me above the 5, and that would get me above the 8, and that would get me a higher high and through this wedge and give me a possibility of success. The higher degree of possibility of success is over this line. So that's how I would view this trade. I would keep this on your radar. This is not going to go away. So Clove, and we had a little battle this week. Again, we don't have, well, we're close to it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. No. So if we don't have 30 spots, let's rock and roll this way. So, to just talk about this a little bit, here we go again. We have another short selling report that's going to tell us about, that this is really bad. I mean, these guys, let's just deal with what these short sellers do. Okay, they sell their information to somebody, usually a hedge fund or an institution, for tens of thousands of dollars a year. Premium subscriptions, they'll call them, right? They'll charge them $10,000 or $15,000. And then what do? They go out to their followers on Twitter and put a short on. Well, these guys are all short up here. The lemmings that are following this on Twitter, they're short here. How's that going? So just understand the motives. Nobody's out there being altruistic, just giving you a report that cost them thousands and thousands of dollars to do. They sold the report to somebody, and now they're letting their clients cover on you. That's what's happening, period. So when you see this and you see how the response from the business goes, it doesn't matter to them. They've already made their money. It matters to the person that's following what's going on. So whether they're right or wrong, they really don't care. That they've made their trade. They're out. They made 20% in the day. Next. So, and that's really, frankly, how these funds think. And you can see that. I mean, look, 60 million shares on that. Who was selling here? Right? I mean, this is pretty textbook stuff. So what I'm saying is when you look at these kinds of things, understand who the players are, their motivations, and the levels of where they're coming in at. So, you can see this level, and we have the 50 and the 5 here. Let's get back to this. These are all pointing down. Technically, this needs to base for a while before it moves higher. If I really wanted to be in this, I would look for a higher high. I think that the other side of this, the long side of this, is pretty pissed off that they were singled out and attacked. So I expect them to continue to be aggressive. But on the technical basis, we had got to get into this gap. And until you have a higher high over here, which you have not, right now you have a double top. Until you have a higher high over here, I would not go near this. But a higher high could be a trigger that you push through these resistance lines and then fill this gap up to here, which would give you at least a support. So we knew it would break out eventually. We just didn't know when. So right now we had this descending line on the weekly, and we were having trouble with this 55. Well, the trouble, we open below it, and what happens? We run up. But look where we stopped and look where we closed, right under this. So right now I just have a double top on the weekly. If I go back and take a look at it, look at the volume, I mean, it's decent volume, but it's below average on the week. I don't know how this plays out after the Super Bowl. We've never gone through a Super Bowl with these kinds of stocks before. I would say that this volume is not overly exciting, right? This volume was, and that gave us an opportunity to test this and get a good price off. But here, I need to get through this. Now, if I get through this level, you're going to see a push. Right? If I close over this level on the daily, you're going to see a push because people are going to feel that they're going to miss it. And you have a very deep base here that's been going for a while. So this can go. So if I wanted to play this, I'd be looking at a daily or smaller, right? And let's get rid of all the horizontal lines for a minute. Let's get rid of all the arrows. And let's get rid of this, because this ray is not valid anymore. But let's just look at this so you can see it. So let's just clean it up a little bit, right? So what you're really seeing here is you're seeing resistance right at the top. This is not something I would jump in. The open and the close were exactly in the same spot on the daily. On the weekly, it looks a lot better, but on the daily, my open and close is the same. That's not good. That usually means that there's a little bit of a fight there, and it could roll, and probably come back and test like the 5, and I don't want to be up in here. This is what's going to happen. So I would wait for this, but if this breaks, and it's a volume spike like this, and we see huge volume, this could really go, and this could push. So keep your eye on it, and to play it accordingly, but don't rush into it until it does that move. That's my advice. So in regards to Ford, they settled some kind of lawsuit this past week, and what you have going on here is very interesting. So look at the volume that's kicking in here, right? And this is the weekly. So look at the volume that is kicking in here now. I mean, that's huge volume. If you go back, when was the last time we had volume like this? It's been 10 years. So there's definitely renewed interest in it, correct? So now what do we have? Now we have we're above the 200 day, or the 200 week, which we have not been since back here. So for 5 years, 6 years, we have not been above this line. That's pretty significant. All these are crossing and pointing up, and now you have a wedge that's forming right on this level. So could this push? Yes. My issue always with stocks like this is they are value stocks. So they trade very differently than your growth stocks, because you have money managers that'll pick them off down here and sell them up here based upon their dividend yield and other levels. But you should be able to see, looking at this, what's going on, right? So you've broken a major multi-year downtrend over the past 3 weeks ago, and you're above the 200 day. So we have changed. And what else has happened here? And we talk about this pattern too, right? So there's a lot going on here. So higher high for the first time in 6 years. So it's pretty substantial. We closed right on that. It's kind of interesting, closed right on that. But so what would I do here? I would look for a close over $12 on the weekly. If we close over $12 on the weekly, this can push pretty easily to up here to this 16, 17, let's call it 17 and a half level. That's very realistic for this thing to push on that. And with the new initiatives that are going to come out with electric cars and how they're going to turn over fleets, these types of companies like Ford and GM probably get a push. So this is definitely one to watch. But just understand it trades a little differently because you're dealing with value guys that are selling based upon price earnings multiples and dividend yields. So this is FUV. This is in our newsletter. And we were in a lot cheaper. I think we're in at like 24. I have to look at the exact price, but I think it's like 24 bucks. But if you see what's going on here, this thing's just gone parabolic. Now, this is the opening bar. This is the closing of that weekly bar. And this is what we've done. But we're still in the top 2/3 of this bar. We did not come all the way back. And we are not breaking this 5 week. So when people are asking me, is it over? I don't think it's over. And that's why I haven't, just come out and put an outright sell on it. And let's just look at this daily and really drill down into this, right? So on Thursday on Twitter, and I would recommend that if you're watching this and you get the newsletter, that you follow me on Twitter under RT Trading. But we talked about this. I said, you're forming a double top. And why not sell? Well, I'm in at 24 bucks. So why am I going to sell up here, my cost, and then try to buy it back and start getting whipsawed and all this nonsense? We bought right, so let's benefit from that, right? I mean, we were up, 50% in 3 days? So why do I have to get involved? Now, what did we do? I said, when we hit this line, trim. So whether you do that or not, that's entirely up to you and your process. Everyone has a different process. But look at what's going on here. We opened at the high, which is really not good. We're closed near the low of the bar, which is not good. But did we break this channel? No. So if I was a very conservative person and if I took my buy price that when I offered it, a close below this on the daily would be concerning and mean that we're back into the channel and that we could trade around for a while. So that might be concerning. But other than that, I really think that we just let this thing decide what it's going to do. I mean, we just went up 50% in 3 days. Let it cool itself out and figure out its next move. So that's the play with it. Do I buy it up here? Absolutely not. Someone mentioned, maybe I could offer selling call strategies against some of these positions. In a former life, I was a registered options principal. I can. I just don't think it's worth your time. Make your money, move out, go on to the next one. But it's something I can cover in a real quick video if people are really that interested in the selling of the called covers against positions. To decrease volatility, you just got to realize that you can get taken out of the stock if it explodes up. So it limits your upside. And I'm not really a fan of things that limit your upside. That's why we're doing this, to have upside. So why limit it? So, and I understand, but then just trim the stock. It's easier. So GH, so there's a gentleman that follows me that is a doctor, I believe, and has just been pointing out some of these moves in these sectors. And some of these moves are just staggering. And we talked about this, right? We talked about IBB. Maybe we should look at that real quick. But you can see what's going on here, right? On the weekly, and you can just see how we're just in this beautiful uptrend. And now we're going to consolidate, and now here's your little flagpole. We can't break it, right? So people always ask me why I look at these key levels. Well, if you were out of this and you missed it, and you wanted to be in it, maybe this was a good spot to know that this was a key level, right? We are right against the 8-week, and you have a support level there. So that's why these levels are important, and it's why I call them out. So this way you can plan. And you're proactive and not reactive when everyone's running around like a chicken with their head out, talking about, oh, this one's hot, that one's hot. That's all nonsense. So what you need to do is you need to be ahead of everybody, right? When you're playing this game, and it's a game, you're playing against the smartest and most disciplined people in the world because this is where all the money is. And you need to understand that. So they know what to do. What they can't do is they can manipulate your 1 minute and 5 minute chart, your 15-minute chart perhaps, but they can't really, it's very hard for them to manipulate a weekly or a monthly chart, which is why some people just trade off of them because they already know they've gotten rid of the noise. So it's really important to set these key levels and understand why. GH, just watch this, let it base and figure itself out. A close above 163.42 if you wanted to be aggressive. That's where you would get in. And you can see this, broke the wedge, trading up, but my volume is falling off a cliff. So I'm not really crazy about this because it doesn't have the action. And that means when the selling comes in, it's going to be harder to get out. And look at what's going on here. We're just pushing, right? And we've respected this support line we just talked about. We're respecting the 21-day and the 5 and the 8 crossed over, and we're pushing higher. So, if it breaks this 163.42 and you're really that interested, get into it. And you have to look at volume. You really do. To give you an example of that, and I'm going to go a little longer today. Here we go again with this. Not really sure why that's happening. But just to give you another example of this and why you need to look at volume. So this is something that I bought. And I bought it on a breakout, very clean breakout. But you see this volume that came in? This let me know that this volume was curling up and that I was okay. So on this break, when I was looking at this volume, and what you can do here for this and go, well, gee, Tone, if it's, if it's 5 o'clock or if it's 10 o'clock in the morning, how do I know if the volume is above average or average? You drill down into smaller charts, right? So here's the 5th. Okay, is it above average already off the rip? Yes, I'm spiking already. So this 15-minute, the volume, this will tell you whether or not you're up on volume. And look at it. Look how much this was awful. But this will tell you if your volume's up or down. And that's exactly what it did. So when this volume came in here, on your break here, you could tell that this was going to push. Very similar to here, right? Look how the volume's up, and then all of a sudden we push. So they're key levels, but how do you know what your average daily volume is going to be? You are looking at smaller time frames, and you're looking at whatever you set your average at. My average is set at 30. So that's DMTK, but you're overextended here, and it's why I really haven't talked about it. I think it should come back and maybe backfill a little bit. So let's keep going. So Intel, Intel's really had its lunch eaten by AMD, and they're even talking about getting rid of their manufacturing and sending it off. I would not be a huge buyer of this. I'm sure that you have people that are in there that are buying it, but we rallied right to this level. We had this beautiful day, and then what happened? Now we can't get above this break from that. So we're not really able to get above that gap fill. So if I was really that interested in it, and we can see this a lot clearer here. Right? Look at this wedge. And when you start doing this enough, you can actually see these wedges without even drawing them. But let's just draw them. See how we're respecting the 200 week? I mean, this is where you buy the stock. It's become a value stock. It's not a growth stock anymore. But see what's going on here? So this is interesting that's closed above here, but I really need to get above this 60 level. And once I get above that 60 level, maybe you have a shot at it here, but you're still at the high of this bar where we collapsed. So, I mean, this has some work to do, and you can see that by the volatile swings. Now, if semis move, this is going to move on them, but there's better semiconductors to own. So this is LMND, and it looks like we just basically have about the 30 bars, so we're going to use this on the weekly. So it's your flagpole. What can't we get above? 168.59. We cannot close above it. Matter of fact, we're not even coming close anymore, right? And now you have another little smaller issue right here. So you have a small minor support here. Here's your major support. And what's happening? We're just consolidating in here. So if I'm long, I really don't have anything to do. If I wanted to worry, I'd wait for the weekly to break. The 5 weeks starting to roll. The 8 weeks right here. I think this when they let this thing run up, I think one of those expert short sellers came out again and was negative on it. So you're going to see pressure from the what I refer to as the lemmings that follow those guys. But you can see how you're respecting that level, right? So if you break this level, I could see why you would get out of the stock and just wait and let it regroup, because I don't really want to run it down to 123 here and just go from there. Would I buy this here? No. I do not want to buy something that is below the 5, the 8, and the 21 day, where they're crossing and starting to point down and challenging this support. And we are challenging support more than we're challenging resistance, aren't we? So what does that tell us? That we could lighten up here. NNTM is just a beast. Like I said it the other day on Twitter. I've never seen a stock that comes out and goes, by the way, we're going to buy somebody, we're going to raise more money, we're going to be dilutive to shareholders, and the stock goes up. So there is just massive buying here. And let's just understand this. They did a secondary, and then they did another secondary, and then they did another secondary. They've done so many they can't do anymore. Now, for people that watch this story closely, and I've gotten a bunch of messages about this, look, I don't really know what's going on. I don't trade on fundamentals. I know that this has a fairly interesting fundamental story because of some of the people that I talk to that trade these little guys and are really into the fundamentals. But let's just look at what's going on here, right? We're right against this 200 week. So why is it important to look at weeklies? So if somebody looked at this and was like, wow, we're running right into the 200 week and we've never been above it. Do I want to be a buyer here? No. Do I want to sell if I'm into this? Yeah, this is a good place to unload right into this level. So it's important to know these levels. Now, let's look at what's really going on here. You're right here, and you're above the part of the flag. So it's called a high flag, right? Because you're above it. It's not rocket science. So But look where the open is and look where the close is. So we have an all-time high close. We're on above average volume, and we're just sitting there. This is not the spot to buy it because this is over it. So at this point, 15 to 17, I really don't care about. What I care about is 17 to 21 that then lets me challenge 33. That's where this trade gets very interesting because this is feasible, right? And there's a massive driving force behind this one, and they're going to acquire somebody. I mean, they came out and said it. Now, I'm assuming that when they do that, it's going to be accretive to earnings, or they wouldn't do it. They wouldn't raise capital to do it. But I don't know that. But that could be the move that propels it higher. So what I would do if I wanted to be in this is I would set an alert right here, right on this moving average, so that when that goes, my phone goes off, my email goes off, bloop, bloop, and then I know that, hey, I got to take a look at this and see what the volume is. And you can overlay what we talked about earlier with how to determine where your volume is. So this is, I don't have enough data here, but you can see what's going on with ozone and OZON. This was our opportunity, right, to trade it right here, not here. So you have broken above this and you have enormous volume, and you could see follow through because of where we closed on the bar. If I wanted to swing this because I felt like I missed it, it would be above this line, a break above this line, and it would be on a smaller chart, like a 15-minute. And what would I look for? I'd look for a little pattern, just a very simple pattern. Here, I wait for the first 15 minutes for all the noise to clean out. And then I just wait for this. I mean, this is a really simple pattern. I can do this trade in a small video, but here's a really simple entry, right? Next 15-minute bar breaks out. What do? You just, if it breaks below this, you could stagger your stop. This would be your ultimate stop on the trade, but you could even stagger it and say, oh, if it breaks down below this bar on this close, I'm out. It never happened, right? So you could even be up here saying that I'm using this as my stop instead of all this. Or you could just do a smaller position size and use this as your stop, and this is your entry. And then how would that have played out for you? Fairly well that day. And now you're in that position and you just move your stop up or you don't based upon whatever your particular process is. But we're not going to chase this. I do think that this goes higher over time. I think it comes back down. Usually these stocks, when they break these channels originally and they don't have a lot of support, they come back and test these levels, and we'll look at it there. So QDEL. So let's look at this on a weekly, right? Let's really drill down into this. See this wedge? So after a while, you guys and girls, you will see that you don't even need to draw them. You'll just see them, right? And then you can see the other one. So what is this doing? The velocity of the trade is contracting. We've had this huge move up, and now we have these wild swings, and we talk about this. These long bars, when we start seeing longer bars, we get wilder and wilder. And it did on our DM trade, right? And we'll look at that one in a minute, just to kind of give you an example of what I meant by that when we started trimming it. So, but look on QDEL. So do I really want to be involved in this? No, I don't want to be involved in this until this thing settles down, right? Think of it as a Bronco. Do you want to get on when it's moving, or you want to wait for it to sit? So right now, just wait. There's no hurry. You're not missing anything here. So, I have the 5 and the 8 that can't get above. These are kind of staggered. We attempted and closed the gap, and then we failed. There's no hurry here. So I would let this wedge work itself out. Let this wedge work itself out. Let it consolidate. Let these go straight for a while, and then go from there. And just to go through this, so we're on the same page. And I'll update this in the newsletter this week. But from where we're in, and you look at the weekly, and we really don't have enough bars, right? So we're going to go back to the daily. So this one we got in at $19. I think we're at what, 30, 132. I mean, the trade worked, right? And we flipped our support, and we talked about the flipping that. So with this trade, this is where we talked about trimming it. So we trimmed a portion, or we didn't, based upon whatever your preference is. And that's really what it is. The goal of this is to give you ideas to trade on your own, but also to look at patterns so that you can do this without me, but also to develop a process. So right now, if I'm in at the 19 price and I bought right and I move my stop up to here, my worst case scenario on this trade is 20%. I'll do that every month, and you'll be set. And you don't have to worry about whether or not you get the all-time high or not. Just keep doing it and just keep ringing the register. So we trimmed here, and now our stop is here, and now we have the 5 above us, and we have the 8 crossing, and I closed at the all-time high of this bar on the year, right? And when you look at the weekly, I closed at the all-time high, and my volume's accelerating. So there's no way that I'm selling this right now. This is telling me that Monday, Tuesday, I could see a push. So there's no way that I would get out of this trade here. I'm willing to take that risk and give this thing $5-6 to hang itself, right? Because this would be my stop. That I'm wrong. I don't think I'm going to lose 20% on Monday, Tuesday, Wednesday. That's my thought for now. Could it happen? Sure. Anything could happen. They could issue a secondary. It could open here. But I'm willing to take that risk. And that's what you guys all have to decide, and girls have to decide if you're willing to take the risk of what some of these trades are. And that's what I'm saying with QDEL. You remember we saw these big wide swings? And then what happened? This is just like QDEL, right? Boom, boom. Look at this wild swing. Then what happens? Consolidates, stops, consolidates, breakout bar, boom, high flag, wedge, breaks out again. So you don't have to be in a hurry, you just have to have the right process set up. And then you kind of go from there. RCUS, so this is just acting very well. And you've come back, tested your 50-day, come up here, flag, broken the flag, tested the 21, 5 and 8 crossover, and from the 5 and 8 crossover, this is just such a simple trade if you want to be in it, because here's your crossover, so you have that level, you have support, major support right here, and you have this huge deep base, and now you're through this level. So this was a classic buy trigger right here, and what happened, right? People bought, and now we're up here. It's not a huge mover, so you might get lucky and it might come in. But what's interesting about this and what you need to look at is the depth of this base and this cup. Look at it. And look at how it's respecting these levels, right? So I have a break here of about 15, 17. So this thing could motor. This could go to $60 fairly easy and not be overextended. 55, 60 and not overextended. Not a bad place to be. So this is very interesting to me. What would negate this move is a break below on the weekly, below these lines. And let's go from here and let's look at this on the weekly first. So these got a big push when we switched administrations because everything's going to be green. And maybe it is, maybe it isn't, but you have to trade what's in front of you. So we're not seeing this big push right now in these names, right? So 69, and big money knows what's going on more than we do. It's a big club out there, and we're not invited. So 69.44, 82.42, all we have is price, and that's all we can do, right? Is swim, like I said in the newsletter, you swim with the tide, or at worst, you swim across it. You never swim against it. You'll get hammered. But you can see how we broke here, opened, broke, but we tested the support, right? And then we opened below it. So we are respecting, and you look at history because stocks have personalities, and look how we respect the 21 week. So you could buy with this is support and this is support, and then a break below this would get me out of it. That's a little too wide for me, right? And I have this volume decreasing, which doesn't really excite me. It may mean that these solar trades are over. But you look at this, and then you have this wedge here. So if I was really interested in this, what I would do, right? See how we break here? So if I broke here, what would interest me here, you have a 5 and an 8 crossover. which could also be a sign. We broke the wedge, which could also be a sign. We rolled back below the wedge and tested the low of that and the moving averages and still traded up. Now we're in this gap. What do I really need to see? I need to see this level, right? If I'm in this longer term, am I worried about this trigger from 77 to 82 to make, or 81 and a half to make $3? And my stop is $3? My risk versus return is 1 to 1. You'll go broke. So I don't want to be doing that. And I'm going to cover risk versus return and the fourth grade level math you need to just trade. It's very simple stuff. And you really don't need more than that. I forget who said it. It might have been Peter Lynch, but it's very accurate. You just need to understand probabilities and risk versus reward and follow your process. But so you see what's going on here? So this 82 and a half, this level just happens to be right here. So, and I'm rolling. So I don't want this. I want this. I want 82 out, because if I get through 82 and I can use that as support and the 21 day as support and it flips, guess what I can look at? I could look and go, I can make 16 points versus an 82, 83 position. So I could have, if I play this right when it triggers, and this is just create an alert for it. So when this triggers, and if it's on volume like this, I can buy it, use $1 or $2 stop, and then I have the probability that I might get this. And that gives me $15, $16. It's 4 to 1, 5 to 1, depending upon where your stop is. I'll do that all day long. I could be wrong on that 80% of the time and still make money. So, and you won't be wrong 80% of the time, and that's where your edge comes in. But that's a video for another time. So people seem to like the commentary, so we're just going to continue the commentary as we do this. So here we are, right? And we're trapped. And this is that gentleman that's a doctor. He keeps throwing these ideas at me, and I love them. I mean, look at this. Look what we did here. And look where we went to. Would I touch this now? No. What is really cool about this chart is this enormous bullish golfing wedge. Look, it engulfs the whole bearish bar from the week before. I mean, it's just a honey badger. It just does not care. Look at it, right? It just engulfed everything. And look at the volume. So we talked about this space, the IBB and the LABU in the previous newsletters. But to get back to this before I go on one of my tangents, you got to get through this. And then I'm up here. So my risk versus reward is not the same. And frankly, I didn't really have a trigger down here that would have interested me. I don't bottom fish. I'm not a pullback buyer. I know people that are, and they do exceptionally well. It's just not my strategy. So right now, I need this to trade around a little bit, consolidate, maybe break this wedge, right? You can see this wedge, right? And just let's look at this wedge for a minute, because this is interesting. See the wedge? See how we didn't close above it, right? That lets me know that we could probably come back and maybe test these levels a little bit, which is not the worst thing in the world. But this means that I don't really have to run into it, right? I don't have to jump. And so this has just been a monster mover, and I have not been participating really in this one. And there's really no reason for that. I just haven't been. But there's just too many that are breaking out. So here you are on your breakout. Now you have this bar. Now you have this bar. And look at this volume coming in, right? But when these bars get longer, they lead me to believe that we could trade down. We could even fill the gap. And that wouldn't be the worst thing in the world. And that can happen. So am I going to chase this here? No. Where would I chase this? If we broke out above this, and then I might look at that little 15-minute pattern, and realize that when I give you that 15-minute pattern, I'm just giving you very basics on how to do it. There's more to it, but at least it gives you an understanding. So let's take a look at this on the weekly real quick, and you can see, right, that that's an insane move. It's not a normal move. So keep that in mind. But I don't know if you remember this one or not. We had this in the newsletter, and it's done exceptionally well. But this was an enormous breakout, right? When we were down here and we broke out like this, and then we gap filled, and everyone's like, "Oh, APPS is over." Like, look at this, right? It wasn't over. It just came back and backfilled, and then it pushed higher. So you have to take that into account. Where do you want to buy it? Do you want to buy it here? or you want to buy it when it pulls back, but then breaks a wedge and gives you a bullish trigger? Well, I mean, it's a fairly easy question to answer. So that's what I'm saying with this. I'm not saying that it doesn't go higher. That's not what I'm saying. What I'm saying is the probability of this thing pulling back, consolidating, right, now that everybody chased it up, right, what I refer to as the lemmings, oh, I got to be in, and then let it come back down and then go higher. And now I'll have a base and a place to buy. So Snap, I just want to cover because it was really interesting. And here's where you're at with it. I mean, this was the day, and we talk about them doing this all the time, right? So they open them below support and resistance levels, right? And then they play with you. And that's exactly what they did here. We opened right at the 8-day, and you opened below support, so they made you think like, oh man, we just broke support. And then what do? Right? They have buyers all day long. And then on Friday, going through my research, I found out that I think ARK bought 2.5 million shares. So that clearly tells you that they're not buying for a week. And I think that this move, when you have a move like this that's all-encompassing, watch the high of this bar because this could really continue. I don't think they're done buying, is my personal opinion. And let's just look at the daily, right? Look at the volume that's going on here on that day, right? And this was the day that we all thought it was going to finally crack. And we just have a massive reversal. And I did mention this a couple times and give key levels on Twitter, and you can go back and look at the timestamps on where to enter. But you can see this volume line. This is not going away. So definitely keep this on your radar. I think that this and pins, even though pins came in, there's a trade there, but I'm not going to review it today. But there's a trade in pins that's setting up. But just look at this. Right? I mean, this is crazy. Like, this is so textbook. So let's just keep your eye on that. Solo on the weekly. So I have this up here twice. Let's just remove this text. We did what we wanted to do. We wanted to close above 8.25. We did it. Do I wish I closed up here? Yeah, but that's why you trade and scale and you set what your risk versus return is. I have the 5 and the 8-week crossing up. I have people that are still in this space. You can see the little wedge here, but I think we're going back to $13. I do. I believe it. Now, price is going to tell me what we're going to do. I'm not going to determine what I'm going to do. So what we're going to do here is just look at this. We opened right here, right above this, right? So if you look at this open, let's do it again. You opened at 9.24. Where's support and resistance? Okay, so they opened above it to let you think that you're safe for the day. Then they gap it down, right? And then you test here. Now, how could you have played this? Well, if I knew that this was support and I knew that this is where the 5-day was, this is where I'm buying. I'm a buyer here because I have my support level, and then you just roll back through on something like this, you probably could even use a 5-minute chart and just go through it and go, gee, I wonder where the buy was, right? I mean, you can just see where the buy was. Here's your support level. Here's your break. Here's your reversal bar. And I guarantee you, and I'm not doing this yet because I'm trying not to throw too much, but if I overlaid, some indicators with it, like an RSI or stochastics, I guarantee that there are some triggers here, or MACD. There definitely is. I don't use MACD because it's too behind, but like a fast stochastics or a fast RSI, absolutely. But you can see what's going on here, right? And that's just on the 5-minute chart. But you would have been able to drill down on it when you have your level set and you know where they are. And we know that this was a key level because it's back here, right? So we used a weekly key level to determine an entry point on a 5-minute chart. That's why these lines are so important. SRNE, nothing's broken. We're between support and resistance on the daily. And let's go look at the weekly real quick. Okay. I have these high spikes, right? I've got huge volume here. Note one thing really important about this. Back here, we had the selling outweighing the buying. What's inversed? The buying is outweighing the selling. that gives you a higher degree of probability that this is going to push. It's that simple. So look at this consolidation. We just talked about this. Peak, 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 right? And now I'm just in here, open, close, and you can see this, right? Now we're starting to have inside days. We have one inside day here. So I think this is getting ready to make another move. If I was not in this, I would wait for this 1455 because I think you're going to this level. There's no resistance really in here. Once you clear this, there's nothing here, right? So we should easily be able to push up to there. TLRY, this is in the newsletter. I think we had a 22 and a half. So here's our major trend on the daily, and we can see what we're doing here. But let's go back and let's look at the weekly, okay, and see our key levels. So our key level and where we think we can get to is 34 bucks. If we break 34, I think we can get to 50. We have a reversal going on here, and this is going to take some time. Now, I'm not going to trade just off the weekly, right? So we're going to have to drill down into it. So right now we have this massive channel. We closed right on this channel, and I'm going to bring this up in the meeting, or on the newsletter rather. Closing right here, if I break this, I may just want to go. I just might get out, we'll find another entry into it, or go from there, or I might split the stop. Because why lose the money? Because we could easily, if we crack this 5-day gets me to 24. I'm not sure that I want to go for that ride because I'm not sure that it holds because it hasn't respected it in the past. And I sure as heck don't want to go to 22 if I'm at 26, right? And we can kind of go from there. Now up here, I have to go back and take a look at what I said on Twitter. But up here you were up, what, 5 points, 6 points, 20%. So if I didn't say trim, that's a shame on me. But when you're up 20% on a stock in 2-3 days, you need to trim it. And I'll go through my notes and take a look and see if I did or didn't say that. But that if I didn't, it's on me. But you really should look at that because now you're here and you're wondering what to do with your $22.50 stock. And my response is, if you're conservative, if you close below this line, get out of it. If you made this amount of money, worst case scenario, your stop's got to be break even. Why would you lose money on the trade? Even if you get stopped out, you can always re-enter. And it's a key line that I said the other day, and ring it home. You can always buy a stock back. There will always be another pattern. You cannot always lock in a profit. Focus on what you can control, not what you can't. So UWMC, I really don't have 30 of relevance here, right? But this is just, whoever wants to look at this, please tell me that you're short because this is just a disaster. UWMC, maybe that was a little too callous, but I mean, it's rare to even have a green bar in this. So this is why you have to watch these little stocks. They're very easy to manipulate. I have the 21-day crossing the 50 on an enormous bearish engulfing bar. The next day I couldn't even get above it and closed at the low of support. My sense, if you are not short this and you're long it, my advice is to get out of the way and put your money in something else. This is not something you want to be a party to. Now, if you're hanging on, and you're doing the old hang in there, you close below this 90, you have to go. I mean, you need to have a system here. And that is, you got to get out because there's nothing below this. And I don't know the story, but I can tell you that this thing can really roll, and you can see how, the volume came in and how it was manipulated and what's going on with it. So this was a target on Zoom, and let's review this on the weekly first. So let's just review what happened here, right? So I got this out, and I am looking for ways to disseminate information faster and get these out because there are certain ones that I'm missing and or that are of value, and I just have to get them out faster. And the newsletter sometimes I'm not sure is the best vehicle. So I am playing around with some ideas, but look what's going on here, right? Look at the wedge. right? And this is a weekly. Okay, and then this week we closed below the wedge. So you're thinking, oh, I'm glad I didn't do this trade. Now, here I'm open at the low of the day or the low of the week, and I close at the high of the week. I got to get through this 21 day, but that's 13 points higher. So where was my entry? Right? See these 5 and this 8 week crossing here? That tells you what's going on. And does that pattern work? Well, it sure worked here. It sure worked here. Stocks have personalities. Look what works for them. So for whatever reason, this is significant to this particular stock. And this is Zoom on the weekly. And we did this Friday at 4:05 as a buy alert. So, and I'm going to tighten the stop up. But to get back into it from where our pivot is and going, we now have a higher high. It's the first higher high we've had since we hit 588, since October. So it's the first higher high. I mean, that's substantial. And this is a big name. Now I have the 5 and the 8 crossing here. I'm above the 21. I'm above the 50. I'm above all the moving average. And what are they doing? They're starting to point up, right? So there's a lot that goes into when I pick some of these. And now I'm at this level. So now the next level is really 428, 433, the 21 week. But I think we're heading back to here. I think you're going to form this huge cup and break through this and keep going. It's just an opinion. I'm going to trade the price. But let's see what happens here. This is not something that I think that you should be looking at short term. We'll honor our stop right now, which will be, which has to get tighter. But let's see how we do Monday, Tuesday, because you can roll back to 405 and test it. And I would probably be looking at adding at that point. ZOM, I'm trying to really avoid doing these smaller names. So just FYI, guys, from now on, if it's not at least $1, I'm probably not even going to show them. So 148 to here. Right. I like being in the larger ones or ones that are going to get institutional sponsorship. And the reason is because that's what moves the stock. So here you are, 148.84. We've broken out. There's no reason to go near this thing. Solid volume. If I was going to play it, I would be looking for a break of this level, this $2 level, and then I'd be using a 15-minute or most likely like a 1 or a 5 to find buy points, exit entry points. And then here, right, I think that you have to look at these ranges. But this is not something that I would really want to be involved with. You go with where the institutions are going. The institutions are not buying the stock. They're not putting $3 million, $2 million into this. And that's why it's so important to look at order flow. So that's it in a nutshell. This went long, and it's the weekend, so we'll go from there. But message me with questions and processes that you want to learn. I threw a lot of process in today, and I did it on a very tip of the iceberg level, but at least it gives you spots to start looking. As always, have a great weekend, and any questions, let me know. I did brighten the screen. I'm going to try and save it differently. Please let me know if the screen looks brighter or clearer.